how do we insure something and not lose money as the business of the insurance company and still provide a competitive product for the consumer? You know, what happens if a tree falls on my car? What happens if someone steals my golf clubs out of my trunk? What happens if this? And it's okay, here's where it goes to go through there. But you have to have those conversations.
Right.
There's so much changing within everyone's policies and underwriting standards.
What do we need to see less of from insurance companies?
So that's a good question. I would like to see more disclosure in policy terms.
All right, Corey Getz here today with UHQ Construction, Hoosier Siding contractor. And I've got a special guest today. He's a Butler graduate. Not only that, when he played football at Butler, he was awarded the Tenacity Award. He's the hardest working insurance agent I've had the pleasure of working with. And I wanted to bring him on the podcast here to get more insight on what's going on in the insurance world and how that can affect Hoosiers. So I introduced to you, Brett Slama.
Thank you, Corey. Thanks for having me on.
Yeah, thanks for coming. I appreciate you joining me today.
Yeah, a little blast from the past with the old football bio there. Trust me, it's been a while since those days. So Absolutely. Thanks again.
Yeah, no, glad to have you. So, obviously you've got an insurance company. Tell me a little bit about how you got into insurance, a little bit about your company.
Yeah.
We had Rick DeMulling in here a couple of weeks ago, and he talked a bit about it, but I'd love to hear it from the other side.
Yeah, so I started in insurance in about 2005. I remember my first day of work was after the Pittsburgh Steelers, Philadelphia Eagles Super Bowl in Detroit. Started with Liberty Mutual, working in their personal line sales division, did home, auto, and life insurance. Worked with them for about 3.5, 4 years, won some awards within the state and the territory to go through there. And then kind of wanted to look and see what other opportunities were in the insurance world. Got recruited by a large independent agency here in town that had, room for growth on their side. They brought me in and kind of taught me the independent business model, where we have broker, we've got multiple companies, you have to source it, you have to find your niche in terms of what you work on. So kind of leveling up in terms of my insurance skill set to go through there. Transitioned away from the independent side and went into captive insurance, where I worked as a territory manager for a retail hardware and building material dealer captive insurance program. So I rep the program from Michigan to Louisiana by the end of the term there with those guys. Got kind of burned out of being on the road 3 days a week, traveling to southern Tennessee one day, to northern Michigan the next week. And
sounds like a lot of driving.
Yeah. I was doing about 45,000 miles a year in the company car, so it wasn't too bad of a deal for me. But you go through and do that stuff on the road. It's just not a very healthy lifestyle in terms of everything. You're eating drive-through in your morning lunch, and
I can relate to that.
Right? I mean, it just grinds on you after a while. It's like, oh man, am I going to get a quarter pounder or am I going to get a Whopper? What a tough day. That's when I was about 345 pounds doing that too. So so it's I transitioned from there, and then January 1st, 2016. Rick DeMulling and I formed DeMulling and Slama Insurance. We did so with Ryan Zimpelman. We talk about my old Butler football days. Ryan was my running back at Butler University, and where I went into the armed services out of school. Was a Green Beret. I believe he's completed his 20 years with the military service from there, so he's all ours now. But Ryan was the principal and operating partner within Smith Sawyer and Smith Insurance out of Rochester, Indiana. Our Rochester office has about 85 years of company experience and 3 generations of the Smith and Sawyer family that have run it. So when Rick and I were forming DeMulling and Slama Insurance, one of those big barriers for entry into the marketplace is, how do we get contracts? How do we go to the Liberty Mutuals, the Westfield Insurance, the Central Insurance, the Hanovers? How do we get a long enough roster of carriers that we can work with so that when market conditions change, we have alternatives to present without relying exclusively on the wholesale industry side? So Ryan, Rick, and I sat down, and if you can imagine the three of us with about 50 ounces of coffee going through us at a Starbucks, we solved about all of the problems in the world that day and kind of came to an understanding that through a partnership with Smith Sawyer and Smith that we would be able to launch our own flag. We wanted to use the branding that was available through Rick and myself in the Indianapolis and Northside areas to kind of let people know who we are. And yeah, we've been running strong for almost 9 years now. We have gotten into the top 25 largest independent agencies in the state. And that's just our local office. If we were to include the Rochester, Peru, we've got 2 offices in Michigan, an office in Chicago, and we used to have hubs in California, Pennsylvania, and New York as well. And we're kind of continuing to grow and acquire and always looking to hire good agents that can come on and hit the ground running. But yeah, that's been our secret. We still work within the retail hardware building material dealer and contractors program. We have a division or a DBA within our company called the National Builders Insurance Group. We refer to it as NBIG. And that intentionally targets people who help build America. So it's your contractors, it's your supply chain people, even some of the logistics side of things through there. We've got a dedicated program with that. And with it comes additional loss control information, risk management strategies. Really the big thing you get is you get somebody who knows what they're doing. Yeah. And that's been a big struggle in our industry, is that a lot of people work with people they like. And sometimes the people you like are doing the best they know how to do, but just make mistakes.
Yeah.
And sometimes that's the certainty that we try to provide to our insureds, is that we've seen accounts like yours. We've worked with people like you. We've seen these situations. This is what we want to do to help educate and prepare you in case something does happen. So that's the quick, I guess not so quick.
No, that was good. I learned a ton. I didn't know the whole story. I thought that was really good.
Yeah.
So that's great. That was great to hear. My dad, I don't know if I've shared this with you. My dad actually was an insurance agent for 25 years.
Okay.
Farm Bureau Insurance. And so, it's a lot of hard work, right? It's not the easiest job all the time. Like, you get to meet a lot of good people, but I remember my dad used to do a lot of evening calls to people's houses back then.
That's still out there, the home visits and things like that. I will say post-COVID, the world has kind of ramped up with Zoom and Microsoft Teams meetings. So you're able to get a face-to-face of sorts while kind of communicating with people. And our industry is not unlike many others in the sense that our phones pretty much work inbound when clients have problems and outbound for growth and opportunity. So we know the phones are going to ring at all kinds of odd hours. I run a national program. So I've got clients in California, New York, and everywhere in between. When we started thinking about that, okay, 8 a.m. for my New York clients is 8 a.m. for us here in Indianapolis. 8 a.m. in Indianapolis is 4 a.m. in Los Angeles. If I'm, trying to be prompt in the morning, getting after it, I got to wait till noon to make sure I'm getting the West Coast up.
Yeah.
So it's things like that are different. But the downside of that is 8 o'clock their time, or 8 o'clock our time here is 4 o'clock their time. So that last email, oh, hey, I got to get that certificate of insurance before we start work in the morning. I'm getting that phone call at 8 o'clock, 8:30 at night. And my wife, God love her, can tolerate it. But there are some days I'm sitting there staring at the ceiling like, why didn't they call earlier? But yeah, such is life. If that's the worst thing I have to do is produce a document.
Yeah.
Pretty good day.
Yeah, exactly. So, in what you offer then, so is it, are you offering, what all are you offering? Business, residential, auto, homeowners, business, umbrellas, what all are you offering?
Yeah, so there's 2 basic schools of thought when I look at everything. There's personal and there's commercial. So our personal lines policies, that's your home, your auto, your boat, your ATVs, toys, lake house, guest house, outhouse, whatever it is in between through there. We can run that. And Nicole Smith in our office heads up our Indianapolis personal lines team. David Harriston's another great agent for us that works within the homeowner side of things. But my focus is primarily on the commercial side. So When we talk about that, that's your business auto, your property, your workers' compensation, your inland marine, which is always the one that people say, what the heck is inland marine?
Yeah.
It's out there. And your excess liability or umbrella policies. And then we do some other things that are, as technology in the workforce is increasing, we're doing things in terms of telematic consultations for large fleet operators. We're doing things with, we've got the gig economy where people are driving for Uber and Lyft and Grubhub and everywhere else in between. In a lot of large metro areas, a lot of those people are renting their cars on a daily basis through like a Turo app or somewhere like that. So they don't have the expense of making a full-time car payment to do that, but they can sign up on the app to make Grubhub runs over the weekend. So they'll rent a car on this app and they'll end up driving it for third-party purpose. So we can do a program with those that doesn't buy your mileage. So the guy who owns the car and leases it to the Grubhub driver, he's got to insure it full time because it's his property. So we'll insure the property in all the uses of it through there. And when you look at your traditional auto policy, and I don't like using anybody else's company names, but let's say it's state all insurance to go through there, they're going to tell you, hey, if you're driving for a livery service where you're delivering people or driving people, not on our policy, because the exposure of having a passenger in the vehicle is greater than what the insurance companies want to take on. So we have programs that can do it, and we even do it on the micro cost basis so that we can say, hey, they drove 36 miles to the airport and back. It costs you 38 cents a mile to insure it.
Wow.
Yeah, I got a little long-winded on that.
No, that was good. I didn't know about all that. That's
yeah.
great.
So the main thing in terms of what we do within our side is we really do try to work as consultants with everyone.
Yeah.
We're not going to know everything about the exterior siding industries or roofing or window installation and glaziers, right? But what we're going to do on our side is that we're going to ask questions to learn about your business. We're going to use our foundation of policy knowledge and industry experience in terms of this is how the insurance works. This is what I need to be conscious of. Or, hey, you know what? I'm not 100%. I need to speak to my underwriter. And that really is the independent business model strength, is that you have a team approach that we're going to learn from our insureds. We're going to be able to use our underwriters. We're going to be able to use our policy writers. We try to avoid it, but every now and again we have to get attorneys involved to get an interpretation of a policy. But that really is the strength in what we provide. Is you got to have some confidence in what you've bought. Yeah. We all were not too far removed from COVID time when everyone the first week or so came out and said, well, I've got insurance, so if they shut us down for a couple of weeks, my insurance will pay for it. And then the realization came out of that of, no, you don't have insurance for that. So that was probably the biggest single event in my career to go through there. But I think the way we had done business leading up to that point, our clients were not caught flat-footed in a situation like that. We were able to explain that, no, this is a communicable disease. This is the same thing that if you had an HIV or an AIDS outbreak in your facility through there, the insurance policy excludes that from the operations because there's no way to gauge how big of a loss or how big of an exposure we would have in through there.
Yeah.
So we were able to explain it. We were able to, through the benefit of some of our associations and lobbyist groups, that we were able to have our industries be deemed essential businesses, and they were able to reopen quickly during the pandemic. I would say that we don't have a lot of restaurants and bars in our book of business to go through there, but that's one of the industries that was hurt the worst through it. But if you look at the hardware stores, in terms of what they did in terms of sales and inventory turns that they were getting through their stores, they're still having record years because of that. If we looked at 2019 versus 2021, you were looking from most of our insureds, and this is an informal thing that we did with our book of business, but most of our sales were up over 45%.
Oh, yeah.
We had a few that closed, and those were generational stores that were unable to turn a sale of the business out. But most of our store owners sat there and said, this has been great. I mean, how many people painted their office or their kitchen or their added a back deck?
Oh, for us, business just went through the roof when people started staying home. They weren't spending money at the restaurants, unfortunately, like you mentioned, and they were all at home, and they're like, I'm working from home now. I don't have to pay for childcare, and we're not going on any vacations because we can't leave. And so it was like, I couldn't believe, because I think we got a little worried when it first hit and everything started to shut down. Everybody was really scared, but then it was like, oh, wait, like everybody's like calling us to like do it. And that's when those, obviously the virtual meetings, like we adapted to the virtual meetings you mentioned earlier, those became huge. And so I remember going into Home Depot, I go into the Home Depot a lot. I go into a lot of the big box stores a lot, but I go into this one Home Depot. I have a really good relationship with some of the guys in there. And I would ask him, how's it going? He's like, it's so busy. And he was so excited because he was like, bonus, because they were getting their bonuses based off volume through the store. And I think, I heard the same thing, whether it's the big box or the small guy or, the contractor. It was like, I couldn't believe how busy it got during COVID.
Anybody who was selling paint was making a killing. That was the number one segment of the retail game that jumped the largest. And you buy it, I'm sure, every day, if not every week. And you can look at those 5-gallon drums of paint at your big box shop that used to cost you $145 for it. Now, what are those, 400?
We do. So we buy we buy a lot. We buy the highest in Sherwin-Williams. It's Emerald. And it used to be like, I think we were getting it for like $50 a gallon, maybe 52. And now it's like $100 a gallon.
Right.
Of us. It's like, holy cow, what happened, during COVID? OSB was the big thing for us. We used to buy OSB for under $10 a sheet before COVID hit. And then it went up to, I think, a high in the 50s.
Jeez.
Now it's settled back out. It's usually around $20 a sheet right now. But
which, if you still look at things, is 100% markup from where it was 5 years ago.
100%. Yeah, exactly.
But inflation's only 8 to 10%.
Yeah, exactly. I guess it averages out, which I have another question about that here in a minute for you. So just to be clear, I know we talked about, you talked about it. So you are, sounds like you're coast to coast, especially like for like a contractor or like businesses, commercial, like you said, you're coast to coast. How about homeowners and residential?
We've got some challenging parts of the country still. I mean, Florida's long been known as a difficult place to get insurance, particularly for wind and hail exposures. It's just the hurricane season that just beats them up, and everybody wants to live on the coast. Well, it's not much protection there to do it. But California is going through a crisis right now. Their insurance commissioner and their governor are trying their best, is what we'll say. But we've got companies that are pulling out. Saying it's not companies my size. Sorry for hitting the mics. It's the big boys. It's Allstate, State Farm, Nationwide are no longer writing new business in California. I think the number that I had heard was somewhere around 8 million policyholders were being non-renewed across the state. Now, in Indiana, where we're one of the more desired insurance territories, we don't have mudslides, we don't have a whole lot. We get the hailstorms this time of year. But when you look into California through there, what those guys are saying is, because of OSB now being $25 a sheet, because of paint being 3x what it used to be, our exposures to rebuild this house have gone up with that. So if we are to say that this home's reconstruction cost is $1 million, and it's interesting in California too, because a 1,500 square foot bungalow shouldn't cost you $1 million to build, right?
Yeah, 100%. You'd think,
but permitting and everything else, and labor and everything else, it's different than where it is here. But the issue now has become that the insurance companies are saying, hey, we want to increase our rates because we've been hit with these wildfires. We've been hit with the big rainstorms that they've had about a year ago, I think is when they had a a hurricane come up the Pacific coastline, go through there, which caused mudslides and everything else. So those are bigger issues on their side that the state, because the state won't allow the companies to raise rates so that they can meet even a break-even threshold. They cap it. I think it's 25, 30% is the most you can raise it, which is a good thing to protect consumers, because the last thing you want is grandma's insurance bill to go up 500% overnight, and she doesn't know anything, and she's on a fixed income. Next thing you know, she's getting kicked out of her house because the insurance bills went up 5x.
Yeah.
The issue at hand is, how do we insure something and not lose money as the business of the insurance company and still provide a competitive product for the consumer to have some affordability? And right now, between the muckety mucks and the bureaucrats, they can't figure it out. And the only people who are being hurt in return are the consumers. Because now, instead of having 4 of the 10 largest insurance companies in the world to find an alternative quote through, they're all on the same band saying, hey, we're not going to take on any new business. You can have, no losses, something that's not in the hills, modest home in any number of these, Corona, California is a nice suburb to go through there. We've got some friends who live out. If you live in the valley, if you live anywhere else, you don't have big exposures. Your earthquakes and things like that, but those are specific peril. So you have to buy earthquake coverage, and you buy it. If you live out there, you buy it. It's just not worth your house falling over and saying, I guess I was wrong on this one. But in terms of our agency and what we're able to do nationally, yes, we have the opportunity to write in every state. Some states are more difficult than others. The Carolinas on the coast of through there now are also tough to get wind and hail coverage for. And then Massachusetts, the auto liability right now is crazy high. I mean, there's just different parts of the country that have different struggles, but if you're in those areas, you're aware of it in most cases. We're spoiled here in the Midwest where we just don't have the volatility within it. We'll get a couple of bad hailstorms every year or 3, and then, new roofs, new siding gets put up, and then, hey, here we go. The problem in Indiana, what we're going to start running into is, like you said, your OSB, that's now 2x, your paint, your materials.
Shingles.
Shingles
all of
it.
Going up nonstop.
Anything that's petroleum based. So that's going to go up to go through there. So the insurance companies who had been charging, $1,000 for your homeowner's policy to go through there, they're basing that on what they believe to be costs of putting a new roof on. So, hey, we think it's, I think we put a roof on our old house for like $8,000. Her deductible was, $2,500 to go through there. That's one of those things that you look at it and say, well, I don't want to pay an extra, $6,000 at the end of the day to, get this fixed. That's why I have insurance. Well, getting that roof replaced that we had at our newer house, which is about the same size roofs, was $18,000. And that's a no-brainer decision on my side to sit there and say, file that claim. What we're running into now in Indiana is we had been basing rates for homeowners policies, assuming that it was going to cost us that $8,000 to do the roof. Now, with as rapid of a change as we've gone through in terms of cost of repair, the insurance companies are sitting there saying, we got to get more rate. We got to get more of this. So when they're sitting there getting more rate, that's one thing. But what's also happening now is that they're requiring higher deductibles. They're requiring wind and hail specific deductibles. They're providing actual cash value instead of replacement cost on property. And if you have a good agent, he's telling you these things. Hey, this is how your policies change. This is what it means to you. This is, the number one question we get when we're writing new business is, what happens if? What happens if a tree falls on my car? What happens if someone steals my golf clubs out of my trunk? What happens if this? And it's okay, here's where it goes to go through there. But you have to have those conversations. There's so much changing within everyone's policies and underwriting standards. Call your agent. We don't mind.
Absolutely.
Hey, can I get 5 minutes with you and just kind of run through where we're at, what's changed, what's on the horizon? and talk to your agent. Let them know that, hey, this is what my concern is. I just don't want to be uncovered. I just don't want to pay through the nose to get this.
Yeah, and and the great part about you is that you can offer them multiple options. They're like, hey, I don't like where this insurance company is taking me. Well, we can see where the other insurance companies are, right?
Yeah, that's for me, that was the motivator at the beginning of my career to get away from the direct writing side and getting into the independent business model. Because when you have changes like this in the marketplace, if you were an Allstate, State Farm, nationwide rep in California, and your home office just told you you're no longer allowed to write new business and property and casualty insurance, keep selling your life insurance and your financial service products, that's how you're going to make it. That's a tough thing to hear.
Yeah.
So from our side, when we chose the independent model to go through with, it does give us, a half a dozen people that we're going to be able to get a quote from. Now, the interesting thing is on the personal line side, which is your home and your auto stuff, those are starting to tighten up. The underwriting acceptability, some companies are saying they won't take a building that's over 10 years old.
Wow.
So are you really trying to write insurance if you're only writing brand new construction?
Yeah, exactly.
Because there are great, beautiful new home communities that are being built in the last 5-10 years to go for sure. It's just not as much as when you look at the millions of other homes that have already been here and are established and don't have claims and have been maintained and have a good property line and have all the security features you'd want.
Yeah. We've been getting quite a few calls recently from homeowners that the insurance companies in two scenarios here. Number one, that they're getting new coverage and the new carrier is saying you need a new roof.
Yeah.
Then we'll cover other things, but we're not going to cover your roof. But then that's going to leave. We won't. And then we have the second scenario where we have one where it's like they've been with the insurance company. They had an insurance claim 10 years ago, got a new roof. Didn't get a very quality roof that didn't last, and now the shingles are coming off and they're having issues. And the insurance company is saying, well,
poor craftsmanship.
It's poor craftsmanship. If you want us to continue your policy, you're actually going to need a new roof. We're not going to continue to insure you at this point. We already covered it one time. So it's kind of interesting. Yeah. A couple of things you talked about there, Progressive, I'd heard dropped 100,000 customers down in Florida recently, about 2 months ago. I think ACV policies are a big thing that a lot of homeowners just aren't aware of. They don't even know. Like every time I say that to somebody, like, do you have a full replacement coverage policy or do you have an ACV policy? Yeah. And they're like, I don't know. How would I know?
No, I have a State Farm policy.
It's like when you talk to your agent, like call your agent is always my first advice there. And I think the other part that kind of leads into that you made a point on is, people will be like, everybody's wanting to buy insurance online now, to get these like deals. And it's like you said, like, how do you talk to an agent? Or is it like every time you call in, you're talking to a different, person who just got out of, got their license. They're just breaking into insurance. They're taking random calls from everybody.
Yeah, that's one of the things that really triggers me a little bit because I've done this for 20 years, right? I've seen a few things. And essentially what these online quoting companies are saying is that first-time home buyer who may not understand insurance or responsibilities is just more comfortable purchasing things online.
Yeah.
So that's where they want to go and do it. And, $2,000, that's too expensive. What if I go back and do this?
Yeah.
And I take my 4,000 square foot or my 2,000 square foot home and I say, well, I should probably insure that for at least $150,000.
Yeah.
And then all of a sudden you're sitting there, we had a small kitchen fire, it was just an accident. But the good news is everyone's okay. And all of a sudden you have the claimant, the claim adjuster come through there and be like, okay, well, you insured this for $65 a square foot on actual cash value. Your co-insurance penalty is going to take this over. And hey, you've got a $60,000 kitchen rebuilt through here. We're going to give you $10,000 towards it. Thanks again.
Yeah.
And it's, well, what did I pay for?
Yeah.
Well, it's you paid for what you clicked on the box online.
Yeah.
Instead of sitting there saying, And I get it. The most things we're hesitant towards are things we don't understand and that we don't know.
Yeah.
So from a consumer base, I get it. They're not as comfortable pursuing something that they don't know, and that's why they work with their friend. That's why they work with someone they like and they trust, because that's what it is. Yeah. We're putting trust in you, the agent, to do a good job. And most of my peers and I do a good job.
Yep.
There's mistakes that get made. There's new agents. There's young agents who are just kind of learning the business. It happens. Mistakes can be made.
Yeah.
But in terms of the consumer side to it, when we allow them to price and write themselves to go their own policy, that to me is something that we need to, as an industry, get better hold of.
It seems like it doesn't make any sense. And it's like,
why would I be required to be a licensed insurance agent if Joe Smith can go online and buy his own policy?
Yeah, not even realize, like, I got a $10,000 deductible now. Like, do you have $10,000 in the bank
that you're going to be able to pay your deductible with? Well, no, but when it happens, I'll come up with it. I'll get it, no problem. And then all of a sudden, you've got a construction lien on your house, and
we've got a claim recently where the customer had a random person coming down the road, downtown Indianapolis, and they ramped up this hill, jumped this like curb, and like the car launched into the house. Right?
Oh yeah, I've had those.
So they need some siding, they need some framing, and they need some roofing, and we go out and we meet the insurance adjuster, and the adjuster's like, just so you know up front, this guy bought the house 4 years ago, for $25,000. So it has a $25,000 in coverage on the house. And we're like, well, yeah, no, we wrote up the estimate. It's $38,000 in repair. And so, the guy like maxes out his policy, and it's like, well, where are you going to come up with the other $13,000? And he's like,
the driver.
I don't have, I don't even think there's like uninsured on that. So I don't even think there was anything there. So he's like, well, I don't have $13,000, and it was like, we can work out some financing with them to end up making it so he can get it covered. But it's like, and now the insurance company's like, and by the way, you need to up your coverage, and we can't insure you and up your coverage until you get that fixed.
By the way, we were happy to accept your money all of these years when you had insufficient coverage. You need to keep paying your bill, but please move your coverage to somebody else because we're going to non-renew you in the future.
Yeah.
Those are great guys. That's the unfortunate thing. Well, here's another one for you. Let's say you are going to go buy an investment property. Going to get a home, make it a rental, zhuzh it up a little bit. When you buy that house, if the previous homeowner had a claim in the house, they're going to charge you for it. So you buy my house. I have a new roof put on my house 3 years ago from a hailstorm.
Okay.
When you buy my house, you can be a first-time home buyer with no home ownership, no homeowner insurance history. You can have a 80-year history of owning your homes and family homes with no claims or anything else into it. When you buy mine, you've got a claim on your record.
Really? And is that just if it's through a certain carrier that's just nationally logged somewhere? How does that get tracked?
So there are reports, like a CLUE report is the property loss report that most people will run, and it runs by address.
Okay.
So if you have 123 Main Street, boom, here it is. 123 Main Street has had these claims over the past, and I don't know how long the reports will go back. It should be 5 years of a window they look at.
Yeah.
I would bet you if the data's there, they can go further back if they wanted to.
Oh, yeah.
The logic has been told to us is some homes are in more weather-prone areas, and as a result, to go through there. But when we push the issue of how do you declare this as weather-prone area when it's only one windstorm in 50 years has hit it? How is that more wind-prone than?
Yeah. So, like, I'm sure you're aware of this. So, it's like maybe 6 years ago or something, Westfield gets hit with a hailstorm.
Oh, yeah.
Right?
Yeah.
Everybody gets a new roof. In a certain neighborhood, it's a big vinyl village behind this Kroger up there at Springville, 161st. So then 2 or 4 years later, a bigger hailstorm comes through. Now these 2 to 4 year old roofs all need replaced and they're siding.
Yeah.
And it's like, you can only imagine, like, I always suggest that it's more of the area you live in, and like some zip codes, I think like that northwest corner of Indianapolis to me just seems to get hit first as it comes into that metropolitan area. I don't know what it is about it. It just seems to be kind of more prone. But that is very,
Yeah, it's a strange world right now in terms of people being able to have claims applied or taken on or off their records. We've got to get some stability on that. And I know we've got good leadership in place within the state of Indiana, within the commissioner's office and through the big independent agents of Indiana. I know these are things that are big topic issues within those offices and in Washington.
yeah.
It's a lot of stuff trying to get figured out right now, though, across a lot of different departments.
Yeah, for sure. For sure. So we work with a lot of homeowners after storm damage, wind, hail, as we've mentioned here so far. What should a homeowner or business owner look for when they're selecting coverage for their home or their business?
So it's geographically will change. So in Indiana, for the purpose of this, things that I will look for are your coverage A, which is if you bought your house for $500,000, that's usually where you're going to see the price for it through there. You're going to get in Indiana sometimes where you got a good buy. You bought that house for $500,000, but when we look at it from a square footage and from the customizations that have been done throughout the home, it's going to cost us closer to $650,000 to rebuild that. So you may have purchased it at $500,000, but they're asking you to insure it at $650,000, and you say a 30% delta. That seems off. Ask your agent for a Marshall, Swift and Beck report.
Okay.
It's a costimator to rebuild. Most people who have bought a home will have an appraisal done on the home to go through from their mortgage company to require it. So if you have that, you can use it as a comparison against what you get back on the MSB. If you don't have that, or you bought your house 20 years ago and those numbers are no longer really appropriate to use, then getting that MSB will help you kind of re-gauge where it's at. You're going to get a number on the MSB that's going to be very close, if not identical, to the insurance company side. That's what they use. But it'll give you your square footage, your cost for your foundation pour, cost for framing, cost for windows, cabinets to toilets. They will have everything in there itemized, and they'll tell you this is what we think it's going to cost. Yeah. That's something that you can do to check against. That's their main rating factor within your policy. Okay. That's the number one thing that drives your price. $1 million house versus a $100,000 house. It's because of that. It's not because of the personal liability associated with it. It's not because of the additional living expense or whatever else that comes along with your policy. The next thing you look for through there is talk to your agent. Have your what happens if. What happens if we have a big storm? If the windows are broken, if my siding is damaged, if my roof is damaged, what's my deductible? What am I getting out of it? The big thing to learn from the consumer is actual cash value versus replacement cost. If you're on actual cash value, have your agent explain it to you, and then ask them, here's the follow-up, co-insurance. That's the other fine print in the insurance contracts that people don't like. Co-insurance is what you did buy divided by what you should have bought. So let's say that it's the $1 million on that Marshall, Swift and Beck report. It's $1 million in terms of what it would have been cost to replace the home. Yeah, that's what you should have bought. Now let's say you insured it for $750,000. So you're at a 75% co-insurance rate. If you have an 80% co-insurance clause, you are 5% below that, and you are going to pay a penalty in addition to your deductible.
Wow.
So that's the insurance company's ways of trying to get people from underinsuring their properties to save money when they know they're going to get a covered loss or claim paid out. So long story short, if you're on ACV, call another agent, call another company, get it on replacement cost. And if you're a rental property operator, like we work with a lot of guys that have, 10, 15, 20 homes in terms of a rental portfolio, some guys that have 200, 300, right? The guy who has 200 or 300 rental homes, he's not as pain sensitive to, hey, I got to put 5 roofs on these houses to get it fixed where I can re-rent them to get it back out. Okay. If you're a guy that has 5 rental properties and you got to put it on 3 of them, now all of a sudden it's, whoa, this is really hurting the bottom line of the business side of this. Yeah. More times than not, non-owner occupied are going to get put into a fire dwelling policy. It's going to get a little tighter on terms. So the ACV gets pushed over through there. Our program that we run, we've got 3 basic carriers that we'll run our rental program operators through. All of them we push on replacement cost. Some are stuck on ACV. It's a home that was built in 1905. We did updates to it in 1992, and by God, the house still looks great.
Yeah.
Well, it's not as structurally safe or anything else that we would like. So you'll get it pushed down to that ACV policy through there. But in large part, that's the number one thing that can go wrong. The next thing on a homeowner's policy that they need to look out for is if they have, and Nicole's going to kill me because I'm going to say it wrong, but they need to have a special property coverage form. What that will do is that will open up enhanced coverage terms. So all of us that wear a wedding ring around the house through there, it's one of those things that sometimes you're doing the dishes and it's, where did I set that thing down at, right? And the nightmare scenario goes through your head. It's in the disposal.
Yeah.
So what happens if you have it on a basic or on a traditional H3 policy, homeowners version 3, you do not get coverage for mysterious disappearance of your jewelry.
Wow. And everybody always says their jewelry's covered under your homeowners.
You've
right?
got $5,000 or whatever it is in jewelry coverage that most standard policies will have. But if you get it into an enhanced or an I hope Nicole will kill me, I'm not going to guess. The enhanced homeowners policy to go through there, you do get that mysterious disappearance coverage, or schedule it. Yeah. If you're, any more jewelry these days is starting to cost more and more. Yeah. Like my dad, he's not going to ever, he's got a Rolex watch, let's say, right?
Yeah.
At 77 years old, he's not buying himself another one, right?
Yeah.
But if he loses it, hey, I'd like to get something for it.
Yeah.
To go through. So schedule those articles on your policies to go through there. Make sure it's worth scheduling though too, right? Yeah. I mean, if it's a cubic zirconium, we don't need the $200. We don't need to schedule that. You can have it on your standard policy through there. The next thing to look for in a homeowner's policy is your liability limits to go through there. We are in an increasingly litigious society. Yeah. People are going to sue you. Everybody has those Karen videos that are out through there. Every now and again, she picks up the phone and calls an attorney. And if it's someone whose tree fell in her yard, if it's a slip and fall from a holiday party, if it was a dog that jumped over a fence and got after a kid or another dog, these are common claims and things that happen. And it used to be accidents within your neighborhood, right? You'd look at your neighbor and say, gosh, I'm really sorry. We'll make sure we tidy up a little bit better. We'll get the tree pulled up. We'll fix your fence. We'll get it taken care of. Unfortunately, we've got enough people on TV and radio saying that they can get you some money out of this deal. And we're now starting to see lawsuits come from there. So check 3 things. Check your coverage A value. Check your actual cash value versus replacement cost within your policies. Yeah. Check your liability limits.
That's awesome. That's really good. How often does somebody need to be checking how often do they need to check how much their home is being covered for? I mean, like we've seen some home prices increase 45% over the last 4 years since COVID, so it's like if somebody's sitting on a policy from 10 years ago that hasn't been updated, or like, do the insurance companies automatically go through and like update these for people?
That's really the job of the agent too. And on my side is what I see it. I don't want my clients sitting there at night worried, am I insuring my home to the proper amount? I want them to have confidence in knowing that we work with a good agent. They're going to communicate to us on an annual basis in terms of this being good, bad, or indifferent. So from our side, and we've seen huge swings from the insurance company side, that they're saying that, hey, we bought that $330,000 house in 2020 during COVID and got those great interest rates. And now that home is worth $500,000 to go through there. The insurance companies have climbed that ladder a little bit to go through there. But again, it's coverage based, not necessarily dollars based. So if we sit there and say, hey, we have that house and it's insured for $400,000 to go through its side, yes, that is your coverage limit to go through there. But if inflation or costs of anything else have exceeded that number, you're more times than not going to have that insurance company honor the replacement cost nature of the policy, so long as you're close. If you're sitting there insuring it, grandma's house is insured for $120,000 and it's, a 6,000 square foot house. Hey, you may have paid that in 1971 when you bought the house, but we got to update things.
Yeah.
That's why the agent's involved in the process, though. That's what our job is to make sure that we don't sit there and renew a policy where we sit there and say, hey, wait a minute, Sally Smith has got, we haven't touched this since we wrote her.
Yeah.
So, and it's within our agency, we're small enough that we can be, label ourselves as a boutique where we can provide, a custom service that we are, I speak to every client I have. I speak with, I know Nicole and David, they talk with every client they have. Yeah. If it's a renewal, even if it's, hey, we're good, we really appreciate it, pricing has been great, we just get it done and send us the bill. Corey, here's the deal. We're going to go through this. Here's your limit. Here's the certificate holders we have on file for you. Here's the autos that we have. Do we need to update your driver's list? Anything else to go through there? Because it's our job to be proactive in updating those policies for you. I can't sit here on one side and blame the guy who's buying his policy online for his home, and then on my side just go to sleep at the wheel and say, well, I did it once, I'm good to go.
Yeah.
It doesn't work that way. But that's back to that online policy shopper. That's what's in 5-10 years down the road from now. Yeah. That's when it's really going to bite us.
Yeah.
Because you may not get a claim your first year or two in terms of being in a property or being on a policy.
Yep.
But that's a fuse that's burning. It's, there's the old underwriter philosophy is there are people who have had claims and people who have yet to have their claim.
Yeah, exactly.
It's not people who don't. So,
well, it's a common question. We ask people when we go to their house, especially when we see like wind or hail damage. It's, have you ever filed a claim before? And it's, it used to be a lot of no's. I back in 2006 was the first hailstorm I experienced here in Indianapolis.
That's a good one.
Yeah, it was a big one. And I remember going around, asking them still the same question, have you filed a claim with your insurance? I've never filed a claim with my insurance company, And I think back then there was more of this mentality of like, I don't want to file a claim with my insurance company. Yeah. Now it's like turned over to where it's like, well, of course I want to get my free roof from my insurance company. Yep. And,
that is a societal thing. And it's not only there are big social things that impact every business.
Yeah.
Insurance is no different. The mindset of, well, F it, I'm just going to file the claim and let insurance figure it out.
Oh, yeah.
That has caught on.
Yeah.
And a lot of people have that mentality. And I would agree with you. Our parents, I remember when I was in high school, I had one bad gear, just reverse. Yeah. That was it. Everything else I could drive, neutral, no park, best gear. But as soon as I put it in reverse, it was 50-50 if I was making contact with somebody, it felt like. So summer job, back my car out, ding the hell out of the back of it, right? Hit it into one of those metal or concrete base light poles in a parking lot.
Oh, yeah.
God bless 16-year-olds.
Yeah, right.
So I do it, and I put a dent in the back of this where an old Blazer, so that the gate wouldn't tip down because the bumper was dented into it, right? And my parents' philosophy, they looked at me and go, hey, dummy, you're going to drive with that in your car because I'm not filing that insurance claim.
Yep.
You're already too freaking expensive to be on the policy.
Yeah.
I don't care. Sure, no problem. Okay, I'll drive it with a dent in the car. Right.
Yeah.
That mentality is gone.
Yeah.
Now it's, well, that car's leased, it has to get repaired, or hey, we don't want you driving around in a car that looks like that. That's a bad reflection upon us, and everything gets turned in.
Yeah, and I think that's the tough part too, because it's like, yeah, everybody wants to turn in the claims, but nobody wants to hear that their insurance rate's going up either.
Right. Yeah.
It's like, oh, hey, maybe inflation's happened, things cost more. But I don't want my insurance to go up. It's like, well, I think the way I've seen it with most people I talk to, it's like, well, if you want to keep your price down, then your coverage is going to maybe not be is great sometimes if you're wanting to pay the same rate as you did 20 years ago, right?
Yeah, the 20 years ago rates they're not there.
Yeah.
You can find some deductible structuring. You can take on some aggressive. We've got some business clients that are taking $10,000 auto deductibles. They're just, hey, the only reason I'm filing a claim is if this thing's the total loss.
Yeah.
And I can eat 10 grand if I need to. We've got some clients on the homeowner side that are taking on $25,000, $50,000 deductibles for their wind and hail coverage. And these are, big castles that have cedar shingled roofs or, imported slate tile and things like that where $50,000 for the roof is nothing.
Yeah.
We've got one guy up in Wawasee who's got a $800,000 roof.
Yeah.
So he takes a $50,000 deductible on it and says, that's about fair. Yeah. I'm 1/16 the interest in this. And, you look at it from that perspective. Yeah. Hey, everyone can take on more risk to share to lower those costs.
Yeah.
But that's a temporary savings, right? I mean, if I sit there and say I'm going to take my homeowner's deductible from $1,000 to $5,000, well, how much money are you really saving is the first question there.
Yeah.
If you're saving $150, is it worth it?
Yeah.
To have $4,000 more in risk to go through there? I mean, what is that? 25 to 1 in terms of odds you're laying out there that a storm's not going to get you?
Yeah.
That's bad. That's, go to DraftKings if you want that action.
Yeah,
right?
yeah, exactly. No, exactly. Kind of switch to the other side of it. By replacing your roof, whether it be from a storm damage or just, you have an old roof and you need to replace your roof, and not only just roofing, but roofing, siding, windows, can that help lower somebody's premiums by having a newer roof or newer siding or newer windows versus having older ones?
Yeah, we always tell our clients too, if you do any structural or mechanical updates to the property, let us know so that we can report it. There's two schools of thought there. The first one is if you proactively put a new roof on your property, you don't want the insurance company to have the assumption that you still have that 25-year-old roof on it come claim time.
Yeah.
So one, get it updated so they know to go through there. And two, within the mechanicals, so if it's your water heater, your furnace, and things along those lines, the newer systems are typically a little bit safer, smoother, cheaper to replace than the old ones. So get those updated to go through there, and you will see some type of concession to go through. But in general, safer, newer, inspected property is the best thing to go through. If you're looking at it from a homeowner side, one of the things that nobody really does, but it's highly recommended from my seat, get your home inspected after you've purchased it.
Yeah.
If you've been there for 10, 15 years, have somebody come through and get into your crawl space, get into your attic, take a look at your roof and your skylight fixtures and framing of the home if it's still good. Let them take a look and see if there's bees or termites or anything else in through the home. Get that inspection report done, then send that inspection to your insurance agent so he can put that on file with the insurance company to go through there where there are the opportunity there for credits to go through. Yeah. It'll cost you some money to have done, but in terms of home ownership and management of your home and your investment, do it every 10 years.
Yeah. I think one thing that we suggest sometimes, and we've started to see this through customers even asking us when they want a new roof, is that there's discounts sometimes coming from Class 4 impact rated shingles. We also sell Class 4 impact rated siding with James Hardie fiber cement siding.
Yeah.
And so we have started to see, I don't know if you see it sometimes on some of the policies where they'll have if you do have that, it will lower the premium a slight amount, not a ton always, but a slight amount. And I think the other thing that we try to talk to homeowners, I'd like to get your thoughts on this is, how much is your time worth to go through another insurance claim? Plus, what is your deductible? Because if you're less likely to have hail damage to your siding or to your roof, then how much is that deductible? And so we try to encourage them when replacing their siding or their roofing, and we offer those options to them okay, here's the difference. Maybe it's $1,000 or $2,000 more for your roof, but if your deductible's $1,000 or $2,000, then you may be saving yourself a round of.
Oh yeah. Well, and there's different construction components will be rated differently. So if you've got something that's even high tempered glass, that's more hail resistant to go through there. We've seen credits for that. We've seen credits. Obviously, Hardy's been one of the more preferred. The cement backer board and everything for that has been something that is preferred nowadays. But the other thing is getting away from it's like cedar shingled roofs.
Yeah.
Like they're beautiful. They're a nightmare to maintain. They are extremely expensive to replace. And they're not as durable in terms of withstanding the abuse that you may get from other tiles. Solar on roofs is also a big thing that's growing within us. If you are putting solar panels on your residence or your business property to go through there, talk to your agent, make sure they know it in advance. The solar guys are really good salespeople.
Yeah.
They're gonna come out and they're gonna make it.
Get that energy credit going.
Yeah,
for
man.
you.
Hey, let's get that electric bill down.
Yeah.
Right. So they're really good at going through there and doing that. But what you may not know is does your homeowner's policy qualify that as an extension of your roof? Does it qualify it as a separate property exposure that needs to be reported and scheduled?
Yeah.
Talk to your agent.
Yeah.
Go through and go through there. But those are all of those things you do when you're going through the process. I would echo your comment of, yes, the more durable material you put in the home, the better it's going to rate when it comes insurance time. It is small differences to go through there in terms of pricing, but pricing is secondary in my world to the coverage that you're eligible for. There may be some companies who say you're only actual cash value eligible unless we've got because home built in 1945 gets hit by a big storm, we're going to go through and the property owner says, hey, we're going to update this to Hardy and we're going to put some some stronger shingles.
Feels like a polymer modified class 4 impact. Yeah.
See, so you got the
So, I'll help you.
Thank you. So you can put those on it and that will get you a better rate for sure. But more than anything else, it may take that actual cash value policy and put it towards replacement cost.
Yep.
So that it may not be saving you necessarily at the time of policy issuance, but at the time of future claim is when it's really going to pay off for you.
Yeah, and some of these big, really big insurance companies that we see where it's like now what we're seeing is once a roof gets to like a certain age, maybe it's 15, 20 years old, then they're saying we won't even insure a full replacement coverage for your roof. We'll only do ACV there. And then another thing we've seen, and I don't know if you've seen this too, is with metal roofing, where they're getting away from covering, if it's cosmetic damage. So let's say, and that's even aluminum siding, which is very little aluminum siding left out there these days.
Yeah.
But up in northern Indiana, I know a contractor up there, and they have a lot of aluminum siding in Illinois. And so now they're writing out exceptions where it's like, well, if it's metal siding or metal roofing, cosmetic dents, it's not functional, your roof's not leaking, and this isn't going to be covered either.
Yeah, my personal favorite is non-matching.
Oh, yeah.
So if you get a storm going west to east, the west side of your house and the slope of your roofs is beat to hell.
Yeah.
The east side is brand new to go through there. So what the insurance companies want to tell you is, we'll replace the siding and the shingles on the west side of it through there. So if you get a new roof and you get like an onyx black shingle or something to go through there, and it's as black as a Sharpie can make it on it, right? Oh, yeah. And you get all new siding on this side, and then all of a sudden they tell you, well, we're not paying for anything on that side; it's undamaged.
Absolutely.
And it's like, what am I? It's like you see that one car, that gray car with a red door going down the street, and it's now you've got that house on the middle on the block, and it's it is what the insurance companies do stuff like that. That's typically a sign of high risk in terms of the home to begin with, or the carrier's appetite just isn't what it should be.
Or they're buying on price, right? Maybe the homeowner's buying. We see this like with siding a lot. Like roofing, we see it. We're going to be like, oh, but really I see a lot with siding too, where it's like, oh, this side of siding got covered. Well, this is 20-year-old vinyl siding and it's faded on every other side. Wait, or we can't even get that siding. And they'll say, well, just get a similar like and kind. And yeah, of course it's not going to be faded like the rest of it. So like you said, it's like that different colored car. And now it's like, well, they're the same color. It's just 20 years of fading.
The door works. I mean, it's closed.
Yeah.
What, you want aesthetics to match?
Yeah,
That's not our job.
Yeah.
No, that's bogus, but it's out there.
Yeah. Do you think if a contractor is not showing a homeowner, so let's say the contractor is coming out to propose a project to a homeowner, do you think that if they're not upfront with their proposal and like showing them, here's a copy of my insurance, could they be hiding something? If they're not saying, hey, here up front, here is my copy of my certificate of insurance. We are covered. We're a contractor you trust, which is required in licensed areas, which here in central Indiana, in Marion County requires a license, but none of the counties around it require licensing for roofing, siding, or gutters.
Yeah.
And so then we see these like fly-by-night
storm chasers.
Storm chasers come in, or just the guy who thinks his boss was making too much money, so he started his own company. And so he's been in business for like a year or two, but it's like, he's not showing. Do you think when they're not showing coverage, there's a chance that like there may not be coverage?
My personal favorite is the guy who's driving down the road and it says insured and bonded on his truck, and then you talk to him and it's lapsed for a couple of years. But, it's like, okay, great. I would say this if I'm a homeowner, we've had some work done to the insides of and outside of our house over the last few years. We've turned down labor from people who just didn't have proof of insurance. And it would have saved us thousands of dollars. But on my side, having gone through bad construction and bad repair jobs as an insurance agent and as a homeowner myself, no, it's just not worth it. I don't want to have to go through and chase down a guy who had a roofing company, closed a roofing company, now works for a different roofing company. And it's like, well, who do I talk to about fixing your mistake?
Yeah.
Right. So
100%.
Having that certificate of insurance, I would keep one on it. Hey, do me a favor, email me a certificate to it, and I've got a few things so I can call people and check if the policies are valid and still in good shape. So I absolutely do that. And you bring up a great point in the sense that it's the guy who's, his boss. We're good. The guy whose boss was making too much money and he's going to start up his own crew and start his own roofing business. I love those guys and their entrepreneurial spirit. I don't put shade on them at all. But the hard thing for them is they've focused their whole life on the labor component of things. They know how to get every kind of pitch and slope work done on a roof to go through there. They know where to buy it. They got guys that they can trust that show up on time and work hard for them. Great. That's only half the business.
Yeah.
The other half of it's going to be on the financial side, where in terms of your tax reporting, your payroll, your insurance, your bonds, your filings, all of that stuff has to be as good, if not better, than the labor execution side. And if it's not, there's just as much risk to the homeowner, your customer, with something going wrong and not being covered properly. Just as much of a problem for your subcontractors or your crew. If payroll and taxes are screwed up on that side to them, they're going to get a tax lien put on them. I mean, it's great to have people who are entrepreneurs who want to get out and work and earn and be a business owner.
Yeah.
We just need to have them come on channels like this and find out, hey, we got to take a look at other things that go along with making this a business, not a trade.
100%. And I don't know if you know the statistic, but 96% of all contractors fail in the first 2 years. That's according to the Small Business Administration.
Yeah. Yeah, it's business. Running your own business is hard.
Yeah.
I mean, I was incredibly lucky to have great partners when we started our insurance practice up to go through, and we had a great timing in the marketplace for the market, and conditions were really good back in 2016 to go through there. If we were starting as an agency in the current market conditions, I'd have a lot more gray hair, a lot less, patience.
Time to start, right?
Yeah, it's just tough, and that's the rub, right? It's how do you be an entrepreneur in what you know, but recognize I don't know everything, and that's what a lot of these guys are going to go through.
Yeah, absolutely. So we at UHQ Construction, we always show every homeowner a copy of our certificate of insurance in every house. Like business, same thing. Like every single time we're like, hey, this is who we are and this is our coverage, and we always show it to them. And I know on my side for business, like if I have a subcontractor or something, I know how to check their insurance. But for a homeowner, how could a homeowner chat actually like they say like, oh, I got this copy of Corey's certificate of insurance? How could they actually verify that it's real insurance, right?
Sure. Every agent who is on the policy or agency's phone numbers in the top left corner, call them.
Yeah.
If you don't, and the other thing there is, if you don't trust the guy who's giving this piece of paper, that's red flag number one, right? Yeah. But if it's some people, it's like Reagan said, trust but verify.
Yeah. Well, I had a colleague, and he basically had showed up at a house one day, and the person met him at the driveway, and they were like, "Hey, I need to see a copy of your insurance for you to call my property." And they're like, "Wait, hold on, like."
Can I put the car in park first?
Well, when we show you our insurance as part of our process, it's just not usually at this point of the process. Like, what's going on? Like, what's making you ask for this insurance? And they said, well, look at my house. And they'd had a fire on the front of their house. They go, oh, wow, that looks terrible. Like, what's wrong? Your siding's all burned up.
Yeah.
You're having issues. And they go, well, I hired this painter, and the painter had his air compressor running in his van.
Oh boy.
And the compressor catches on fire. So it catches their house on fire. Well, even worse, it blew out of the front window of the van and also caught the neighbor's house on fire across the street.
Boy.
Okay. So then they used to be friends with those neighbors.
Yeah.
Like, not anymore, right? And so now turns out the painter never had any insurance.
Yeah.
Right?
I don't need
so
that.
then it was back on their homeowner's policy, and so they're like,
the homeowner's policy is not going to cover much of that either.
And so they were like, we need to see a copy of your insurance before you go out. It's like, okay, well, we can do that, not a problem.
Well, think about it. You're on the delivery side, I'm on the production side, but as a homeowner, we both are. Doesn't it feel better when someone comes in and says, oh, by the way, here's my proof of insurance, here's my track record, here's my online review sources, here's my testimonial list. I don't want to come across to you as the most charming person with nothing behind me of substance.
Yeah.
Here's all of that.
Well, I think some homeowners take for granted how much it costs to have insurance as a contractor. Like, it's not a small expense to have it. And I think what we see there's 4 types of ways that contractors can put a homeowner at risk of liability. It's number 1, just not having insurance, right? Mm-hmm. They could just not have insurance at all. Number 2, they could have what we call a ghost policy, where they just like made it up, right? Mm-hmm. However, they got a copy of the certificate and they're just like showing their certificate. Maybe it's the last company
they go on Google and hit a cord 125, and all of a sudden here it is. And you get a typewriter and hey guys, we got a certificate of insurance.
Absolutely. I've seen subcontractors do that in the past, where it's like, wait, hold on, we called them and there was actually no policy ever there. Another way we see it is, and this is similar, I think, to auto insurance, and maybe you can speak to this for a second, is we call it the one payment Chuck. So there's like Chuck in the truck, who's just like this one-man show contractor. Mm-hmm. And usually he doesn't have any workman's comp, or he has a workman's comp waiver, right? Even though he has other maybe guys helping him, because they're only helping him. But, he gets his insurance policy, which he can make in payments, and he needs that to get his license. So then he buys it and he has it and he can show a homeowner, but then he doesn't make the second payment because he got behind on his bills or for whatever reason.
And I missed one payment. They canceled me. That guy's an SOB, not wanting to work with me. Screw him. I got everything taken care of. That happens. There's all kinds of ways that people are going to try to cheat the system and try to find workarounds. Here's the bad thing. Eventually everybody gets caught.
Yeah.
There is no, I evaded insurance throughout my career. And this, boon of, economic return on my side was so worth it.
Yeah.
It's not the case. The auto is really the biggest case of that. when people need to get their license plates renewed, when people need to get their driver's license renewed even, you'll see them go through and, hey, well, your tags look like a July renewal and your policy is July 1st. Okay, yeah, this makes sense. Well, two things. The insurance agent that you work with, or if you're a homeowner, to go through there and you call the Mulling and Slama Insurance and you say, hey, Brett, do me a favor, check on this guy. Is this certificate legit? We'll make the phone call and just say, hey, need to confirm coverage. It's up to date. I don't need a certificate. I just want a verbal from you as the agent to say, yes, the policy is in good standing, to go through there. Most good agents know that I'm not going to provide you with a verbal. I'm going to provide you with it in writing. Because if I sit there and rely on a verbal, then it's, well, no, I talked to Brett. Brett said everything was in good order. And all of a sudden, Brett's going on today's information and tomorrow's changes.
Yeah.
So all of a sudden, all of that goes through. So always get it in writing. Get something when it comes to, like when we do a certificate check for you guys, we call the agency, we call the carrier. And we work with the carrier directly to make sure everything's going into it. And they're really hands off in terms of what they can share with us. But they can share that, yes, the policy is in good standing. And that's the number one thing we can do, because tomorrow it may not be. And if it is today, that's all we can go on. At renewal, when we go through and do audits for workers' comp or for general liability to go through there, we're going to get all of those certificates verified by the underwriting companies as well. So they'll go through and do their due diligence on their side. So again, it's double checked and triple checked. But yeah, the vulnerable point is up front. That's the first guy to see it, right? It's that, what did you call it?
Chuck in a truck. Tyler in a truck, yeah.
Chuck in a truck can go through there, make that one-time payment, and in 60 days, he's without coverage to go through.
Yeah.
On the top right corner of the certificates of insurance is a date of when it was issued. If it's over 60 days, ask them for a new one. It's another thing to do.
Yeah, absolutely. Absolutely. And then the last way we see homeowners have issues is it goes back to usually the Chuck in a truck, Tyler in a truck, and they get handyman policies.
Oh, yeah.
And then the handyman policy only covers them like 6 foot off the ground. It excludes any helpers and anything like that, right?
Yeah, and that's not necessarily as bad of an example as I've seen. Like, we've got some people who are listed as landscapers who are doing roofing.
Yeah.
And it's, well, yeah, we primarily do landscaping. Primarily, how much? 50%? Okay, well, what else are you doing? Windows, siding, roofing, chimney caps. We'll get anything. We'll get some plumbing work done in through
here. Jack of all trades, master of none.
But a jack of a trade is better than a master, whatever phrase goes. So that happens to go through there. And to be honest, at that point, you're dealing with fraud. You really are. Yeah. So it's not something that you want to create a homeowner's responsibility of doing 5 steps of insurance verification for getting their kitchen remodel done, right?
Yeah.
The best thing, and I think you guys do a really good job with this, is have your reviews, have customers speak. Yeah. That's much more important to me than knowing that, hey, they've got a $5 million umbrella policy behind them. I don't have a $5 million exposure at my house, right? Unless you kill me or my wife, it's not an issue.
Yeah.
The process from the insured side or from the homeowner side, having online reviews, having testimonials, and then having a physical copy to go through there, that's how you can learn to trust the contractor you're working with and have some evidence in hand. Absolutely. That if things do go bad, I'm not totally FUBAR.
Yep. Absolutely. Absolutely. And I think you kind of touched on it. It's like, there are ways that there's insurance fraud that happens out there. One of them that we see a lot of, which is insurance fraud to us, is when other contractors try to eat people's deductibles during insurance claims. And, it's just like the way we look at it is like, if that contractor is willing to eat your deductible, then commit fraud and involve you in that fraud. Like, what are they willing to do up on your roof when you're not looking? Like, and how are they going to save that $1,000 or $3,000 instead of like giving you the roof that the insurance company is paying you for?
Right. Or they do all of the roofing work, but they added the gutters in the job cost that they turned into the insurance company, and they told you your gutters are fine.
Yeah. They just have a couple dents in them.
Yeah, we'll just ping those right out. We'll put a new coat of paint over the outside to make it match the
I don't
same.
even think they do that most of the time. I don't even think they do that.
So, yeah, that happens. In terms of eating deductible, to be honest, that's money, that's profit that's being given back by the contractor. Because if the contractor held $20,000 roof, you've got a $2,000 deductible. Hey, I'll throw $1,000 back your way. So you're only out the grand to go through there. How much has he padded his number to get to the 20 to start with?
Yeah.
If he's got $1,000, if he's got 5% to throw back at you, and that's not necessarily bad things to do from the contractor side. It's, hey, if you're going to refer me to 3 of your neighbors, I'm going to consider this to be a marketing spend to go through there, but you have to report it that way. And if you tell the insurance company that, hey, this $20,000 invoice we sent you guys, we only collected $18,000 of it because of deductible and we didn't collect anything from the homeowner, it's bad faith from the homeowner to the insurance company. And I don't know how many people you have a business relationship with that can screw you out of money or cheat you on a deal that you want to keep working with.
Yeah.
So the bigger red flag comes into it as, hey, there's all kinds of ways that if you want to do this from XYZ roofing company wants to do some deductible concession, put it in there as a marketing fee, put it in there as something else, and write them a separate check for that amount.
Yeah.
Don't have it be, well, we'll just, you pay me, I pay you. Let's just not pay anybody.
Yeah.
That's fraud.
Yeah.
If you sit there and collect the full roof claim amount to go through and say, hey, you know what, Corey, you referred me to 3 of your neighbors that I'm doing the roof on their work through there. I'd like to pay you a $300 referral fee for each of those roofs. Here that is. That's totally different.
Yeah.
But if it's somebody who's just basically cooking a deal because I'm the guy that knocked on the door first in the neighborhood.
Yeah.
And it's, hey, we'll go through here and here's what I'll do for you on the side.
Yeah.
That's cheating as a way in your side to win the deal.
Yeah.
Right. To go through there. And your alertness there in terms of, is that a guy I can trust with my home?
Yeah.
If he's going to commit financial fraud with an insurance company and tie you into it, what else is going on, right? I mean, is this the...
And how long until this guy's out of business for committing fraud? You know what I mean? Like, not that contractors have a bad reputation or anything.
No, now we're touching a nerve. Yeah.
So, what are some common misconceptions people have about just insurance or insurance companies in general?
So I grew up my dad was a doctor, so he worked with health insurance payments and things like that for his services. By a very young age, I was taught that insurance companies cannot be trusted, excuse my language, are sons of bitches and are going to screw over anybody they can.
The opposite of my dad. Right. Like, you need insurance.
Well, and, it tells you how well I follow advice that I make a career in this, right? So that's where I grew up with it on. I grew up with the understanding that the insurance company is going to try to screw you over any which way they can. Well, I'm 20 years into it, and I can tell you honestly, that's not the case. If you start getting into, like, we've had multi-million-dollar liability and property claims get paid out from insurance companies to go through there. When you start getting into large loss scenarios and large claims to go through there, that is so heavily legally analyzed and there's so much oversight within those processes. That's not a concern from me in any practical way.
Yeah.
The lower levels where people are either, like we talked about at the beginning, the guy who buys the policy himself online, all of a sudden doesn't realize, I don't have coverage for this. The pandemic hits and your business is closed for months on end and you still have to pay your rent and you still have to pay your employees and you still have your taxes and overhead and everything else to go through, and you find out there's no coverage here. I don't think of that as much of an industry problem as much as I think of that as an agent problem. We are the people that are front facing and have to deliver the news. We have to understand it. We have to know it. We have to be aware of the changes that are coming down the pipeline. We have to know the powers and the power players in the industry for what they're pushing and what they're trying to get done. I can tell you honestly that when Warren Buffett speaks, our industry listens, right? Yeah. When Brett Slama speaks, our industry couldn't give a shit, right? It's you talk to the people that have the power and the influence to go through there. So the misconceptions on insurance are that insurance is not there to help. It is. Yeah. It's just very specific in how it's going to help. Yeah. And that's the number one thing. And we talked about before in terms of people not understanding something, that being their barrier in terms of why they don't want to go forward and learn more about it. I don't get it. I don't care. I'm okay. I've been doing this my way for this long. It's working. Then in a lot of phases in life, that's true. That'll get you by. Yeah. But it has to come from the agent side. That's why when our team is really tied into the Big I, the Independent Agents of Indiana, because we believe that it's our responsibility on the ground floor level to communicate. And if you have an agent who's trying to hide back things or not trying to be fully disclosive or doesn't disclose things as much as they need to, that's a bad agent, right? And my personal opinion, not shared by company or powers that be or anything else, we've got too many agents. We've got too many people who are, 80 years old, 75 years old, who are sitting on accounts because that's their pension. Yeah. Are they up to speed with the insurance policies? Do they even live in Indiana full time anymore? Are they semi-retired and their son, daughter, grandkids are taking over the accounts and, they love them, but they don't have the wares that, the founder did.
Yeah, haven't even updated the policy in many, many years.
Right. And it's not getting looked at by them because they're on the way out the door to go through there. But, the policyholder is still sitting there with the bag at the end of the day, and it's a problem. Yeah. Other misconceptions in the insurance industry, we're nerds. There's that Ned Ryerson from Groundhog Day, Phil. So most of us are in the business because we like people. And I can say that from my side, it's been a chance for me to learn different businesses and industries. Like I can look at my month that I have on my desk right now. I've got a artificial intelligence robotics company that's based here in town. I've got a series of warehouses that a guy was landlording over through there for a flooring and distribution company. I've got a restaurant with liquor exposure to go through. And I've got a cyber and tech consultancy trade group. That's as different of a mix of people as you can get. And for me, it's a chance that I get to learn a little bit about this. I get to learn, hey, we're now in execution point of insurance contract. I can tell you what the contract and the insurance policy says. What I have to learn from the client is how does that impact your business, or how does your business operations, how does it comply with what these restraints are from coverage? Yeah. What are you tolerant of on your side that you can say, hey, if this happens, I'll eat it. Yeah. Right? It's just so unlikely to happen. I'll self-insure. So to go through there, but that's why we're in it. I mean, more times than not. The money is good, but it's stress like every other job, right? I mean, you can sit there and say, oh yeah, sure, you've got that. What do we say in the industry? It's the renewable income. Yeah. Well, it's renewable when you win. Yeah. Right. It's it's going backwards when you lose. Right. So the guys that are selling cars, they get their commission on that car that one time. And they say, well, I don't want you buying one car from me. I want you buying every car from me from the next 20 years, right? Yeah. That's how they're going to grow their client base, is by sons, daughters, cousins, nephews, whatever. In our side, if we screw up a claim, or if we sit there and have an insurance company say, hey, we're not renewing based on operational exposures, they don't jive with us. Yeah. Then we're back to work on square one, and we're it's tough these days. Yeah. I mean, back in it's not 2016 anymore. I can tell you that. 2016, you'd send the application in, you'd have a quote by the end of business the next day, and hey, good news, we're going to save you 20. We're going to give you a better coverage for less money. Yeah. Right? Who says no to this? Yeah, right. We're going to give you a big, But nowadays, it's just different. It just is, and it's I don't know. We're going to get through it, but it's good.
Yeah, that's great. That's good stuff.
I saw an article recently that said one of the number one drivers of inflation was auto insurance, and auto insurance has risen 40%. I think it was 42% year over year in the last year. Does that sound not far off in some situations?
Oh, in some situations, it's, you get that 42% national average.
Yeah.
There's that one guy who kept his policy flat. That means there's another guy that got 84% of the increase, right? So the easy thing that I say is everyone's rates are going up.
Yeah.
It's how much it's going up is going to be based on the carrier and what their financial considerations are. The good thing about that, on the independent side, we have the ability to move you to a different company. But if you're with a big box insurance company, they only sell their product in large part. If they say, hey, I don't want to use other companies' names, but if you're using a farm state insurance policy, and they're going to say, hey, your premiums are going to go up 50%. And you say to them, well, can you give me a quote from somebody else? No.
Yeah.
You go to us and we say, hey, we've got you with Central Insurance and the premiums are going up 20%. Well, what can we do? Well, hey, I got a quote from Hanover. I got a quote from AIG. I got a quote from Liberty Mutual. And I got a quote from Westfield.
Yeah.
Boom, 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 and boom. Here's the strengths behind each of them. Central's still actually better in pricing than what these guys are because everyone's chasing the same rate increase on their side.
Yep.
It's a rate increase is going up through there. It's going on. Why it's happening? Inflation is the easy answer, but let's really say what that means. So if the auto part, I hit you, cave in the back end of your tailgate, that bumper, that gate, that switch, even the little letters that are, say Ford or Chevy or whatever the car is onto it, all of those costs are up. We get it. Everything costs more these days. Okay, boomer, we get it. Things are expensive. Well, what also has gone on is that there's a labor shortage coming out of COVID as well, particularly in the automotive side. We have fewer mechanics. We have fewer body shop employees who are qualified to do what they do. So repair projects now take longer. Well, what's gone on with the rental car industry as well? If you have a rental car, you used to be able to get that enterprise rent-a-car, $25 a day. You get your little Ford Fiesta.
And they sold off like a majority of their rental cars during COVID.
Well, but anyway, through there, now that rental car is, instead of being $25 a day, it's $100 a day.
Yeah.
So we're going to cap your limit in terms of what you have on the insurance side to go through there, but we're going to pay all of it out. Whereas in previous years, in 2015, you'd sit there with a $1,000 limit on rental car. You're good for 2-3 weeks.
Yeah.
You'd be no problem. Now that's sometimes 3-4 days. Yeah. If you're a mom that has to get a minivan or a SUV to get all the kids and everything else into it, those are a couple $100 a day. You may have 3 or 4 days of coverage on that $1,000 policy limit now. Yeah. And if that repair, it used to take 2 weeks, is now taking 4 weeks, your out-of-pocket spend is one thing, but the insurance company is paying full limit on that. Yeah. And then the insurance company, when it was a $10,000 repair, now it's a, let's say, $15,000 repair. Well, here's a little math for everybody at home too. Most insurance companies will say at 33 to 35% loss to the vehicle. So if it's a $10,000 damage to your truck, unless that truck is worth $35,000 when it's fixed with the mileage and depreciation from the accident, it's a total loss. Wow. The insurance company is going to buy that truck for $10,000 or whatever the actual cash value is of the truck. So they'll sit there and say, hey, the truck's worth $20,000. Here's $20,000 to go, to be done with it. And you can say, well, wait a minute, I still have $24,000 on the loan.
Yeah.
And you can go back, other things in terms of, well, hey, how do I do this? Well, we're going to total it. Well, the loan is to my company, right? My company loaned me to purchase my vehicle, or my loan is from my parents, or my loan is from, anybody other than a traditional bank that's going to have a lien holder status provided through insurance that way. Yeah. So now all of a sudden you're upside down in your car, and the bank's going to tell you, or the insurance company is going to tell you, we're not fixing it. We're going to buy it, or you're going to drive it the way it is. Wow. That's a bad situation to be in.
Oh, that's tough.
But you start looking at it from the insurance company side too, as a part of why the rates are going up. So we've said, Everything costs more. Everything's taking longer to get repaired. Limits are getting paid out at a higher side through there. When you look at your liability limits on your policy to go through, I was talking about this the other night with a contractor. He's been in business for 40 years. Wow. His insurance policy when he first started was for $1 million in occurrence limit, $2 million in general aggregate limit. 40 years later, the policy has the same $1 million, $2 million limit to go through there. Now, I'm 45 years old, and I can tell you $1 million in 1985 versus $1 million in 2025 is a hell of a lot different.
Yep.
So when we sit there and look at claims, I rear end you, you miss time from work, you've got medical bills, you've got pain and suffering, you've got mental anguish, your family is not being able to enjoy you, you can't coach Little League, you missed your everything else to go through there. Well, what used to be a $100,000 settlement for something like that now is well in excess of $1 million.
Yeah.
So when we look at the liability limits on the policies to go through there, they used to be set so high that we never had a reasonable thought that they would be hit.
Yeah.
You know, we're gonna protect you so well that you'll never have to worry about, you know, needing more insurance.
Yeah.
That's not the case. And what happens then is it's not even the guy who doesn't have the umbrella policy. It's the guy who has a $250,000, $500,000 policy. He's buying as much coverage as he can get for himself on his personal side to go through there. And all of a sudden he's got a $300,000 loss. And it's, well, we're going to pay the full policy limit to go out. And all of a sudden you sit there looking at it and saying from the insurance company side, we put this total balloon limit out there. That's our piggy bank, that if everybody has a max claim, everybody has losses to go through there, there's only so many coins they can pull out of it, right? Absolutely. And if we're sitting there taking bigger handfuls out because it's a traffic accident on a roundabout that costs $50,000 to defend and settle, you know, that used to be $5-10 grand.
Yeah.
So these are all costs that the insurance companies are defending and they are providing coverage for. And when we talk about what are the misconceptions with insurance, right? These are the good things that they're doing, right? This is what we're helping with. We're paying people's medical bills. We're getting people back to, you know, in some cases to walk again, to, you know, to be able to get off of, you know, a serious injury situation. So those are all the things that are going into the price increases. And again, number one way to combat it, call your agent.
Yep.
Talk to them. Figure it out. Hey, and if they tell you, you know what, Sally, you're just not going to get anything better. This is as good as it gets right now. And we're hoping to get another 12 to 18 months before we see this snake turn its head.
Yeah.
If you trust them, trust them.
Yeah, absolutely. Absolutely. You know, I think, yeah, it's similar misconceptions in our business is the same thing with inflation. People are like, oh, well, you know, it's the material cost alone that's driving it up. It's like, well, at the same time, you know, we've got our employees and they want more money every year. Imagine that. And then when they go to the grocery store, you know, that costs more, when the gas costs more, when the vehicles we drive to the job sites or the equipment that we buy, it all costs more every year. And so when people are like, I don't understand why my construction costs are going up. It's like, we are doing everything we can to keep those down.
Right,
but you know, insurance goes up, different things like that. Like we've got to do it. And I think it kind of goes back to the other misconceptions you have where it's like contractors don't care, right? And they're just out there to like get money. And it's like, you know, there are contractors like us where it's like, we care a lot about like making our customers happy, doing a quality job for them. But it is similar to insurance where there's just a ton of contractors out there.
Yeah.
And the part of our problem in the state of Indiana is there's not any licensing in some of these areas. And so then we've just got the Wild West going on, and any contractor doesn't even need to pull a permit. So he doesn't need insurance. He doesn't need a bond. And it's really appalling. I mean, you could do that in Carmel, Indiana, you know, probably one of the most wealthy cities in the whole, you know, Hamilton County, the whole county, the wealthiest county in the whole state. And you don't need a license to put on a roof or to put on siding or to put in windows. And
it's even worse than that, though, too. Those storm chasing guys who come in, those phone numbers don't work in 6 months.
Yeah, exactly.
You got a problem, want to call somebody? Oh, hey, I got his card right here.
Yeah.
dee.
Yep, exactly.
We have reached a disconnect.
And it's the same thing with the, 96% of contractors fail in the first 2 years. I mean, venture capital has come in locally and bought out a few big players in town, big roofing companies. Some of them have roof in their phone number.
Yeah.
And they go from 20 million a year to 5 million a year in revenue, and they're just not the same company. And now all the guys that were running their business and doing the sales for them said, you're not taking care of me as a venture capital company, as this big corporate company. I'm going to go start my own independent business. And especially, it's not very hard for me to do.
No, you don't have the licensing restriction. You don't have to file for permits on everything to go into it, depending on where you're doing your work. It allows that, right? And I get it. We all want competition in the industry. Competition breeds price competitiveness, which helps the consumer.
Yeah.
No one's running from that or saying it, but there should be a level playing field established so that things are done properly and legally. You walk a fine line in those situations, right?
Yeah.
I think there was a report that I saw, like building a bathroom in New York City, right? It was one of the parks. They had to build, a men's and a women's. I think there were 3 or 4 commodes in each side. $2.8 million, right? To go through there. And you sit there and you say to yourself, now, wait a minute. This isn't like, it's not made out of marble. We're not doing the, to go through here. But it was the permitting. It was everything else to go into it. And that, to some degree, we have to look at that and say that's some corruption involved to it, right?
Yeah.
Someone who's running this project for the municipality to put a bathroom at the park, somebody knows somebody, and that 2.8 million is making that somebody's life a lot better.
Yeah.
So that kind of stuff presents itself with more regulation that we introduce into the industry. But having a baseline standard or having some minimum requirements to sit there and show, hey, I do have a license, I do have a background in this, I do have a reason to have my name on a shingle and go out telling people, yes, I can fix your roof. Because from what I'm hearing from you, all I got to do is go to a car truck place that can get my car wrapped with roofing on the side of it.
Yep.
And the first time we have a heavy rainstorm, just start knocking on doors saying, hey, I'd like to take a free look at the top of your roof and see if you were part of the damage. Your neighbor's up the road there, who they never say their name. They just refer to him as your neighbor up the road.
Yeah.
So your neighbor up the road there got, we're going to go and we're going to get started with them probably next week or so.
Yeah.
Okay. Sure. You want to hop on my roof? Go ahead. You're on your own workers' comp. Go do your own thing, right?
Yeah.
So I go up there and I take a couple of pictures, and there was a hailstorm 3 years ago that left a mark, and by gosh, it's still there. So I'm taking these to go through. We've even heard stories about guys who were carrying paintball guns on the roofs with them.
Well, I was about to say, one of the questions was, do you think that there are contractors that do put damage on roofs?
For sure.
Yeah.
The greed is not exclusive to any business or industry.
Yeah.
And if a guy needs to have, hey, I've got this is a good size, it's a good location, this is going to be an easy job based on the gables or the trusses within hey, I get it. The temptation is going to be there for them, but they're screwing over, a homeowner. They're screwing, and I'm not climbing on the roof with the guy to sit there and take the inspection with them. If I pull a Peter Pan off the top of that thing, there's no workers' comp coverage that covers me as a homeowner from falling off my roof.
Yeah.
We're going to trust the people that get up there.
Yeah.
And that's why we have adjusters from the insurance companies typically come out and do a follow-up or a review. We try to have the contractor and the adjuster out at the same time.
Yeah.
So they can sit there and bicker with one another on site and figure it out between the two of them.
We always say it's a red flag when the guy asks you to file a claim and he doesn't meet your insurance adjuster out there. It's like, we recommend you choose your contractor before you file the claim. Like maybe get a few estimates if you like, figure out who you want to work with, and then have that person working with your insurance company.
For sure. And on your guys' side, that's got to be one of the best, or one of the areas that you can make your business run a lot smoother by knowing the adjusters who are involved, knowing the insurance companies and their process, if they have specialized paperwork or anything else to go into it. Having familiarity with those specific people and companies makes the process go smoother, even for the homeowner to go through, where it's not the homeowner getting 3 emails in a day saying, hey, I can't get a hold of Corey. Hey, Corey got back to me and looks like we've got a question here. Hey, Corey told me to call you and see if we want to do this. And all of a sudden, As the homeowner, it's like, guys, what am I paying for?
Yeah,
If it needs to get done, get it done. I'm what's the old phrase? Just give me the baby, don't tell me about the labor pains.
Yeah.
So there's some of that there, but yeah, in terms of crooked contractors, absolutely, it's the same thing with automotive shops, right? There's the old story about don't send your wife to the mechanic shop by herself. They're going to sell her windshield wiper fluid, or not windshield wiper, headlight fluid, to go through there. Things that just don't exist.
Yeah.
So
That's funny. What do we need to see more out of when it comes to insurance companies?
I think what we're going to see is we're going to see newer companies emerge. We've seen a lot of like elephant and the pie insurance where it's all simple one-word names.
Hippo. I had a hippo claim recently.
Yep. So there you go. There's one. So you're going to see these newer companies emerge through there, and a lot of that's being backed on big venture capital from their side. We need those companies to succeed. We need new players in the industry to spread that risk out amongst the carriers. What we're seeing right now is a contraction on that side, specifically state by state. We're going to start seeing that even more over the next few years. So what we should probably do, if we're looking at this holistically as an industry, we should be more focused on regionalized carriers, right? If you have a company that is like West Bend Mutual is based out of Wisconsin, Central Insurance is based out of Northwest Ohio, those companies have an awesome understanding of their geographic footprint. They know exactly where they are. They know where their companies for distribution are. They know their weather patterns. They know their exposures. You get companies that, and like a Liberty Mutual alumni, love them to death. But you get a company like Liberty Mutual, Cincinnati, or Hanover Insurance that are all 50 states to go through there. That puts a lot more stress on the layering of the management system, because you may have, it used to be Ted Kelly when I was at Liberty, the CEO at the top of the food chain to go through there. The C office, they're not looking at regional things, right? That has to be done with a layer of management that has the ability to be empowered to make decisions on rate, to make decisions on coverage to go through there. And more times than not within the large companies, it's reactionary. It's, hey, California and Florida have been loss leaders for us as a company for the past 50 years. But the good news is that Arizona, or Missouri, Indiana have been so profitable. It lifts all those ups, all those failing territories to a break even. And then all of a sudden you start saying, well, hey, our revenue is good. The more revenue we have in, the more leverage we can create with borrowing capacities. All that's good. So that's one, is getting more distribution channels out there, or more carrier channels out there. The other part of that is reinsurance. So insurance companies buy insurance is the easiest way to explain insurance. If you were to have 1 million houses in central Indiana insured by one company, that one company would sit there the first time a tornado or hailstorm came out and said, we're for sale or closed. We can't pay all of that. So they buy reinsurance. It's typically an offshore, Bermuda-based is probably the most common. They'll buy reinsurance from these holding companies that are bond specific. So there's catastrophe bonds, there's property bonds, there's liability bonds, and everything that goes into that to make up the reinsurance funding. And then the reinsurance in turn says, hey, we'll buy 50% of your risk from Liberty Mutual. So if you don't want to if you've got $1 billion in risk exposure on your books to go through there, we'll buy the second 500. Or you're on the hook for the first $50,000 in losses. We'll pick up everything up after that.
Yeah.
So that's how the reinsurance contracts go. We need more reinsurance companies to come into play. Those guys are what drive the rates for the Central Insurance, the West Bends, the Liberty Mutuals. They're buying reinsurance from these guys. And if those costs are up 40 to 60%, I think I heard from one of our carriers this year, it was a 48% increase on their reinsurance costs.
Wow.
So that's a huge impact to the consumer down the line. So we need more money in reinsurance. We need more investment into those channels. And then we need the companies that have started over the past 5-10 years, we need them to succeed. If they succeed, it creates a blueprint and a testimonial for more people to come in and to compete for it. You look at old companies that are going through there. So when I worked for that captive program, they were still paying claims from 30 years ago.
Wow.
So if you have a permanent partial disability claim on workers' comp or from an auto accident that goes through there, and you're on a disability settlement that's getting paid out, that's coming from the insurance company.
Yeah.
So the longer history you have of operation, the more chance you're going to have to pick a few of those up. So you start picking those up in the volume and the size that these national companies that are operating in all 50 states are doing, as opposed to we're in 16 to 20 states.
Yeah.
That bottom line suck just starts pulling and pulling and pulling from it.
Yeah.
So that's the importance of the new companies, is because they're not going to be hampered with these long-term tail claims. So if you can get a new company to succeed through there, that really changes the dynamic and the power up.
Makes a lot of sense. I usually tell people, it's like if you see them advertising it on TV and they're this huge company like the farm states, it's like they got to pay for the marketing for one, and you bring a whole nother side to it where it's like they've also got all this years kind of baggage coming with them. I think it's a really good point.
Well, you see, you can't turn the TV on without Flo telling you 15 minutes will save you 15%, or, Jake is going to sit there and tell you that they're available 24 hours a day in terms of it through. Well, the interesting thing is you look at the guys who are sitting there telling you, hey, call me anytime, unless you're in California, unless you're in Florida, unless you're in these areas. It drives me nuts. I listen to a lot of podcasts, and it's always an insurance company as a sponsor. And one guy I listened to broadcast from Hermosa Beach in California, and I'm like, the title sponsor doesn't work in your towns. Doesn't work in your state, doesn't work in your region. Yeah. Now, how are we sitting there telling us that this is a company it's got advertising synergy, right?
Yeah.
Or we've got a lot of mutual alignment in our product and your service. Bullshit. You got money. That's all they're looking at. It is from it. So
what do we need to see less of from insurance companies?
So that's a good question. I would like to see more disclosure in policy terms.
Yeah.
So sometimes what we see from companies is they'll send us a one-pager, and it'll have CG 0682-02 has been added to this form. And they'll give a 4-word description of what it is. Okay, now I've got to go on my computer. I've got to go into your system. I got to pull up CG 0862-02 and figure out what that is. Yeah. Right? Send me the full disclosure of it. If this is a reduction in coverage for fine arts, no big deal. My home improvement store doesn't need fine arts coverage. They don't have a Picasso hanging in the back.
Right.
So we can accept that to go through there. But when I'm going through 26 of these endorsements and changes on an annual basis, give us more information to go through there. And the only reason why they're condensing the information that they're sharing is the intent to withhold that information from someone who's not going to take the time to read it. Yeah. That, in my area, is just, if we want information to be distributed, distribute the information. Don't put it into some code that, it's going to save us ink in terms of what we're printing. It's a freaking email. Don't tell me you're saving ink. So more of that, which is less of something else. And then less advertising. I hate to say it that way. It's not good for a podcast. It's not good for this.
Hey, this is all organic. We can't do anything.
But from my side, it doesn't do us any good to commoditize our product with cost savings. If Liberty Bibberty is going to save you $787 on average to go through there, cool. I'm paying $1,100 for auto insurance on my car. You tell me how I'm going to save $787.
Yeah.
Oh, you're not going to do that, but you're going to put that big number out there.
Right.
And that's the line in the water to get people to pick up the phone.
Yeah.
And I get it. We're all looking for at-bats. We're all looking for quote opportunities. We're all looking for that. But when you sit there and commoditize the product and you tell people to go online and buy it on the website to go through there, you're undermining the value of an agent, you're undermining the coverage that's being provided to the consumer base, and you're creating the exposure for long-term harm.
Yeah.
Scale back the advertising, change the advertising nature of it. Focus on coverage that your policies provide. Focus on service that your agents or your distribution channels provide. Start showing value in those aspects of it, and I guarantee the bottom line of the insurance companies gets better along the way. When they've got people that are hung up on trying to save $50 a year on a homeowner's policy, that all of a sudden we look at it and say, well, we raised your deductible $4,000, your coverage went down, but we kept you below that price mark that was your pain point. Yeah. And I get it. Money is a real problem for everybody.
Yeah.
But there's got to be other ways of finding that $50 or that minimal amount of money. There's got to be another way to find it. Yeah. Because, what's the old phrase? I've heard 100 people tell me. First bill I pay is the mortgage. Second bill I pay is the insurance.
Yeah.
And it's like, well, they're paid at the same time through your escrow, but we appreciate it. So that's kind of the nature of what I'd like to see less of. It's don't commoditize the industry. Yeah. Find value in what you're buying. If you're buying a truck, you're going to want to know, what can I tow behind it? How much can the bed hold? What's the speed performance if I have to get on it? What's my fuel efficiency? What's the reliability in finding parts? What am I going to do for service? If I have to get an oil change, can I change it in the driveway, or is this one of the fancy ones that I got to take somewhere? Yeah. All of those questions you're going to ask yourself at least one time over the life of buying a car. Are you asking yourself the same number of questions when you're buying the insurance for the operation of the car? Yeah. Probably not. It's not as fun.
Yeah. But then you get to needing it, and then all of a sudden it's like, oh, hey, because I can't, even though more people, like I said earlier, more people have filed claims, I think like when we see it, it's like, they still don't know what their policy coverage is. Like, yeah, I just got a new policy a couple of years ago after my last claim, and now I don't know what my deductible is. Maybe it's 1%, or I don't know what it is. And then, well, do you have ACV or RCV? I don't even know. I have no idea what that means, and it's so unfortunate.
And I get it. It's not going to be for everybody. Everybody's not going to have the mindset of checking on their insurance coverages. But if that's the case, just make sure you can stay in contact with your agent.
Yeah.
Right? Make sure he's still working there. Make sure he's still in the business. You guys talk about a 96% washout rate in 2 years. This was when I first got into the industry. A friend of mine was more on the financial services and life insurances side of the business, while I was on the property and casualty. And we had both gotten our license right around the same time. He's a couple of years younger than I am. And we're 3 or 4 years into our career. And by that point, we had everything figured out. We knew, well, just let us go, Yeah. So we're sitting there, and he brought a statistic to me. He goes, yeah, I just got my, he made $1 Million Roundtable. He did the XYZ as his awards to go through. And he goes, yeah, one of the guys at my industry said that 70% of insurance agents wash out within the first year. Wow. And it's like, well, that makes sense. Most people are put on a 1-year contract. If you make it, you make it. If you don't, you haven't really invested anything into it. You can go do something else.
Yeah.
He goes, it gets even worse. And he basically goes through about the 5-year mark, and then there's about a 2.5% survival rate. Wow. And that's bad for an industry. But I'm also the same guy that says we need fewer agents. Yeah. We need people who are, we have in insurance part-timers that are through there. It's like the realtors world, right? Oh yeah. I've got a realtor's license. I sell one house a year. Yeah. I got a friend of mine that calls me, and I'll do the contract work for them, right?
I'm a stay-at-home mom, stay-at-home dad is really what I am, right?
Yeah, right. And there's nobility in everything through there, right?
Yeah.
To sit there and say like, hey, I sell one house a year. I made $2,000 in my real estate license. I'm a realtor.
Yeah.
No, you're not.
Yeah.
You have the ability to do so, but it's not what you do.
Yeah.
And we've got the same kind of issue within the insurance world, where we've got some people I've got a license. You know what? I'm going to have you talk to Brett. Let him. He'll get you set up and go through and do that through there. But it's not like you'd sit there and have that person who's a referral influence to say, I'm an agent, right? And if it's somebody that says, hey, Kevin, you referred me to Brett. I need to talk to you about what Brett's doing. That's kind of what happens, because when I'm the producer who's, doing 2 or 3 deals a year and write the deal and walk away, everybody in the equation just gets bad side of it.
Yeah. What do you think we need to see less out of on contractors?
3 things that I always look for when I work with a contractor. How much is it going to cost me to get this done? When's it going to be done? What do I do after it's done? Right? Pretty simple. How much, when am I going to do this? Is it insurance related? Is it out of pocket? When's it going to be done for a checklist to go through there? And if something goes wrong, who do I follow up with? Is there a warranty number I have to call with the siding product? Is there something with this? Give me all the information. I don't care if it's a packet, whatever else. I'll play 800 number hell and get things taken care of. You just tell me that that's what I need to do.
Yeah.
The middle part is where the consumer struggles there, right?
Yeah.
You guys are going to be able to do your bidding and your estimating, and you're going to be able to handle everything else afterwards, but it's when I'm going to get done. Now, some trades are different, right? Like yesterday we had 40-mile-an-hour winds, right? I don't want a roofer on my roof with 40-mile-an-hour winds.
100%. We delayed a roof. It was supposed to go Wednesday. We had the rain, and it was like, but just because it's not raining tomorrow doesn't mean we're going to do the roof. We're actually going to do that roof on Friday.
Yeah. So we want safety and everything else to go through there. What I've gone through and doing some investment properties and flips and things like that over the year is we get a guy he's on a hot streak with getting people to say yes to his bids, right?
Yeah.
And everybody kind of wants it done before we get back to school. And all of a sudden it's, I'm going to work here for a day, or work here for a day, work here for a day, and nothing's getting done at any of these locations on time.
Yeah.
So from my perspective, when it comes to claims-based work to go through there, particularly for our commercial clients, whether it's an apartment building that has to get tenants back into the units, or a warehouse building that has to get things back up and running so that they can back and start making money and having the till ring again. Those are things through there. Don't cook your date of completion to win the job.
Yeah, absolutely.
Because it's gonna wash out. We're gonna find out, hey, you told us it'd be done July 1st. It's August 15th, and we're done.
Yeah,
right? And
absolutely.
Large projects, long times. We had a retail commercial retail building on the Near East side of Indianapolis that has small fire into it. No structural damage to the building. The electrical is what caused it. $1.6 million in painting and cleaning. When we went through the estimates to go through, it was $857,000. And they have a medical space in it, so they got to do a lot of duct work cleaning and a lot of detailed work to it. So it's not just getting rollers and doing it. And it's a 30-foot ceiling to work inside the building as well. But when you're sitting there going through it and they say, you know what, this is a 60-day project. It's probably going to cost us $857,000. Here's our breakdown to go through there. And then when you get the actual invoice and it's $1.6 million and you start looking at it and it's hotel stays for people who live in Indianapolis, it's rental car coverage for the crew foreman who's in town. It's a per diem every day for somebody who's out of town that's coming in and they're not signed into the worksheets in the morning, so that they're not there, but they're still sending us the per diem invoice as if he was there. We got a per diem for Thanksgiving Day that they sat there and told us that they had 3 meals out of pocket on Thanksgiving Day to go through. And when we pulled up the security camera footage, no one worked the Wednesday, Thursday, or Friday of Thanksgiving, and we got hourly charges packed on the invoice from there. Wow. So I can tell you to get it done on time, but when we start looking at cases like that, where it's, I just turned in the timesheets. I should probably do a better job looking at that. I mean, so much so that it was a $700,000 delta for our insured and our insurance company. Yeah. And I can tell you, I'll never work with that restoration contractor again. Yeah. And when the sales rep comes into my office and she says, well, how come we're not getting any jobs from you? I look at her and say, well, we're very lucky. We have not had many claims over the last few months. Most everything has been small residential internal work to go through there. We've been very lucky in that regard. So there's not much to pass out. And, here's what you told me and here's what you did.
Yeah.
And it's the same responsibility we have as an insurance agent. If I tell you have coverage and I don't give it to you, what am I doing?
Yeah, no, we're up front. What we try to do too is we try to tell our customer we're delivering estimates. Here's our time range, and then once we do what's called pre-build inspection. So after we sell a job to somebody, whether it's a commercial or residential, we go out, we meet with the building owners, homeowners, whatnot, and we say, okay, as a production person, this is exactly what we expect timeline, whether it's 4 to 8 to 12 weeks. Funny, you kind of brought up some apartments. So we're doing some apartments right now down in Bloomington, and we said, yeah, we can get this siding on in a month. But it'll depend on the interior contractor. They'd had a fire in the building, and we said, well, you'll be ready. And it was like 2 more months before after that contractor got their windows done so that we could do it. Oh no, it's 6 months later, the interior's still not done. And it's like, what's the timeline? It's like, I think meeting the timeline's huge.
Yeah. Well, and the other part of that is it's like, we're going to accelerate the timeline on one phase of the recovery project, but not the others. Now, how many of these are, we have to do this before we should do that?
Yeah.
Like you're putting siding in before windows are installed?
Yeah, exactly.
It seems a bit like you'd want to do these kind of at the same time.
Yeah, exactly. And I think that's one of the best reasons where it's like, for us, it's like we recommend to homeowners, if you're going to have your roof done, you shouldn't just have your roof done by a roofing company. You should have it done by a company that does roofing and siding, because your roofing touches your siding. It also does gutters. And, if you're doing siding, you should choose somebody that does windows because they can understand that intersection, not just a company that only does windows. A lot of times those windows leak around them because they're never flashed or sided properly around them, And, that's why people hire us, is to try to find a contractor that'll do these multiple trades and actually know what they're doing, set proper timelines, all that good stuff that you're talking about there. What advice do you have for people looking to enter the insurance company?
Find a mentor. Find someone that you can speak with honestly as your mentor. A lot of people, when I give that advice, they'll seek out the highest ranking person in the company, right? I need a mentor. I'm going to find that guy's a partner. He knows his shit. I'm gonna understudy him. Are you going to go to him and say something that's going to jeopardize your career? Are you going to go to him and hold things back because you don't want to say something stupid in front of the boss, or you don't want to do something that's so out of, by ignorance, something that's totally unacceptable?
Yeah.
Right? Find layers of mentors. Find someone that's your peer that you can work with buddy when you come on board together. If they're hiring 2 sales guys or 2 claims reps or 2 adjusters to go through there, hey, what are you working through? What did they tell you? And just have that 5-10 minute phone call before or at beginning end of the day, just to have that touch point to go through there. You get a good idea in terms of the pulse from somebody else. And then when you have your, what I call an upward mentor, somebody who's going to teach you things, it doesn't even have to be in insurance. I would say for a mentor relationship, it can be someone who's in banking or mortgages or real estate or finance. You can get anybody in any ancillary or parallel field and just ask them questions of, what are you seeing on your side? If you were in my shoes, how would you play this hand? I try not to give free plugs, but I'll give one here. I work with Brian Neal in the group at the Blind Zebra here in Indianapolis. It's a business leadership and coaching seminar. For me, it gives me an opportunity to work with someone who's an NFL referee and public speaker as the leader of the group. But we've got banking, trash service, painters, tech, publications, social media, all of the different people in those different industries, and we get together and form a little think tank. And it's, here's the issue I'm having, here's this. And we're all people that are in a sales leadership position to go through there. So for me in my role, and you in your role as a president of a company, we're not a finished product as a person, right? We're still learning every day and what to go through and who do we learn from. Now, I don't want to go inside my company and go, hey, like we've got a new agent, right? I don't want to go to them and be like, hey, we're getting squeezed on X, Y, and Z issues, or we're having a difficulty in the Carolinas with placement for coverage. What experience do you, I don't want to go downward to solve problems. I want the people who are looking upward at me to say, he's going to get it figured out. He's got his shit together. We'll get it taken care of and done. Now, I, on my side, will go to these different people in different groups and different networks and say, am I looking at it the wrong way? Is there another solution to this problem that I don't see? Have you had anything as a parallel? And whether you're starting day one or you're entering year 20, having a true network or mentor position is the best thing you can do. The next thing to do, find a niche. Get great at it.
Yeah.
If you can be known as the best insurance agent for retail hardware stores and building material dealers, be the best at it. Don't fight as the generalist. Now, I can sit here and tell you that I've got 5 or 6 different things that are from A to Z on the spectrum of risk to go through there, but I'm 20 years in. Yeah. I've seen it, I've done it, I can handle it. As just someone who was starting out, when I was starting out in the commercial world, I tried that approach of just kind of trying to grab everything I could.
Yeah.
If I was smarter, if I had a stronger mentorship, it would be, you wrote this account. Go find every account in the state of Indiana that does exactly what these guys do and use the experience that you wrote to create your niche. I don't care if it's the Humane Society, if it's a landlord, property manager, whatever else it is, find it. Find it, dive deep into it, become a person in that industry that people will sit there and say, oh, do you know Corey Getz? Do you know the guys over at UHQ? Yeah, I see his stuff online. Yeah, hey, I do this. Yeah, hey, I met with him a couple years ago at some kind of other thing. Build a reputation, build a niche, and then once you get through there and you get really proficient at it, you'll start to understand how insurance works in its layers, what it's going to respond to, what it's not going to respond to, what would be paid on a professional liability claim as opposed to a general liability claim, employment practices versus general. All of this other stuff you will learn by being an expert in your industry. Yeah. And if you're trying to become an expert in one industry, you only look like an idiot in one industry. You don't remove any doubt by trying to go from hardware stores to car dealerships. It's totally different business, totally different insurance to go through there. Yeah. If you know something, do it. So we always try to hire somebody that has some other type of background in terms of where they came from on our side. We've hired people who were real estate closing specialists. So they would check the paperwork on a home sale. And anybody who's been through that knows that it's a phone book of documents and, okay, here's this, initial here, initial here, initial here. She had the experience of being able to explain every one of these boxes to a home buyer. Yeah. Well, that's perfect for a homeowner's agent. If they can understand the transactions and what it represents on the policy from the mortgage side, it translates to the insurance side. And if she's used to communicating with homeowners to go through there, let's keep those programs in line. So this particular employee has gone through and done that for 5 years with us. I think she's the best homeowners or best personal lines agent in the city. And now that she's done this for 5 years, the people that she's worked with on the homeowner side are, hey, I own this business. Would you be able to help me with this? Yeah. Hey, I have these investment properties. Some of them, she had a guy a couple weeks ago come in with a $15 million commercial real estate building in downtown Indianapolis. Wow. Saying, hey, I need to get some insurance on this. My other guy screwed up and didn't tell me. You've always been extremely, communicative and disclosing what we have. Yeah. I want to work with you. Yeah. Well, it's going to cost you more money. I don't care. I want to work with you. Yeah. That's how a good agent's career should evolve, is become an expert in your niche, use your skill set that you've built a life leading up to. And then once you get really, really, really good at it, everything else will open up to you. You'll start having a network of people who call in. I'm not prospecting artificial intelligent robotics companies. It's a friend of mine who owns it and says, hey, we're doing something unique here. Yeah. Is this something you can help with? Well, tell me about it. Yeah. What are you guys doing? Where are you doing it? How are you getting your products? How are they getting delivered to the consumer? What's the cost? What do your employees look like? What's their daily task like?
Yeah.
You start getting comfortable enough with conversations like that, and it doesn't become a product pitch, right? Yeah. It becomes like an attorney. If you've worked with an attorney before?
Too many.
Yeah, right? But I mean, when you find a good attorney, right? Someone that you can trust, someone that you can talk to openly, someone that does good work.
Yeah.
Well, it's really hard for me to convince me to work with somebody else.
Yeah, absolutely.
I mean, I can go back to them and say, hey, your hourly is, it's killing me. And it's, hey, it's worth it.
Yeah.
Yeah, absolutely. Do I want to go to the phone book every time and say, okay, here's, a new attorney. Let's try those guys. Yeah. No, and I would hope for people with you, if like I've got property managers that have single family homes, if you get a guy like that you do good work with, I would hope that if he owns 100 homes, he calls you on all 100 of them. Yeah. And says, hey, Corey, you did great for me over on LaSalle Avenue. I've got something on South Rural that's, it's a different type of property. Can you take a look at it for me? Yeah. Absolutely, I can.
Yeah, we get a lot where it's like we'll do work for one person and they tell the person they work with at work, and then they got more. And that's how we end up getting a lot of our business is referral, 100%. And I know what you mean about specializing. I know when we started out, it was like, I have a huge background in roofing, and then it was like, well, I want to grow out more. Let's do some siding. And then we got really big in siding, and then it was like, well, but people need windows. All right, well, let's get better at windows. And so then, it's like growing in each niche over the years. I definitely get what you mean there.
But I would say, to follow up on that, the siding business, the window business was born from you becoming really good at roofing.
That's right. 100%. Yeah. Right? Without me getting into that, it wouldn't have gotten here.
And conversely, had you started and tried to be a roofing, siding, gutters, windows, chimney caps, masonry work, if you tried doing all of that at once, what does your job list look like on a Monday?
And how do you ever grow as a company?
How do you source materials?
Yeah.
How do you go through, and you guys have a great relationship with Hardy? Yeah. How do you get that if I'm working on masonry half the time, or if I'm working on shingles on this part of the job? Step by step
build
by
those
step.
Relationships, 100%. Anything you'd like to promote today? Obviously, your insurance agency, we appreciate you coming.
Yeah. So real easy for us. We've got our Demulling and Slama insurance, which is our Indianapolis office through here. That's Demulling, DEMULLINGSLAMA.com, which is got to get better. I know we got to change that. But the other one too for us and within your network of subscribers and everything else is NBIG.com, the National Builders Insurance Group.com. So that'll go through there. That kind of gives a background. We've got a little bit more videos, some testimonials, some outlines in terms of the industries that we work with within that dedicated program. And from our side, that gives you a chance to schedule directly on our calendars. If there's something that you're, hey, I've got to take a look at this, rather than trying to call somebody out of the blue and catch them. It goes on there, go onto the Calendarly link. It'll set an appointment on your agent that you pick for availability or personal preference. You can select it, book a meeting with Sheena or Terry or David or myself, and just say, hey, I'd like to talk to you at 3:00. Here's what I do. And then we'll know at 3:00 I've got a scheduled call and figure it out. And if we can help, we'll do everything we can to help. If we can't, we'll tell you why, and we'll tell you what we would do as an alternative going forward. In terms of anything else that I would say to promote or to put in front of somebody, not real. That's who we are. It's what we do. I'm trying to think of anybody I'd want to plug in terms of anything else. No, I don't think so. In terms of anything else, it's just company-wise. If I start going into like the NRHA and the association group to that, I'm getting too narrow in terms of that. But no, I'd say in general, call your agent is the piece of advice I would say is takeaway. If you have a question, call your agent. Don't talk to your neighbor. Don't talk to your, buddy across the hall. Call your agent. He's the person with the answers. If you can't get a hold of your agent, call a new one.
Yeah, absolutely. Yeah.
That's the other thing too, that a lot of loyalty for good reason. I still buy my cars from the same guy I bought my first car from, right? I don't push people away from loyalty, but if it's a one-way street, that's not loyalty, that's obedience. And be willing to take a look at something else.
Absolutely. That's great. Well, Brad, I want to thank you for coming on, taking the time.
Yeah.
I think we spent a little more time than I expected.
I was going to say, I can talk, man. I got the coffee, so.
I thought it was great. Thanks for
Cool.
everything, and I really appreciate you coming in and meeting with us.
Appreciate you, absolutely.
Maybe we could do it again in the future. I think I still have a half a page of questions I never even asked you.